we're going to start to see the term a markup's been applied on a sale. So what is that? Well, for every cash or credit sale of inventory, there are several important figures to know. So first of all, we're always the business in the middle here. And what we do is we buy a particular item, say this shoe here, from a supplier for a certain price, which in this case is $100. We call that the cost price. So that's what we pay. And then what happens is we sell it to the customer for a selling price, which is $250. And it should always be more than the cost price, otherwise we haven't made a profit. We will actually deal with what happens when we sell something below cost price, but we'll deal with that later in the course. So in this case, we bought that shoe for $100. That's called the cost price. We added our profit to it, which in this case was $150, because we sold it for $250. So if we sell it for $250 and it cost us $100, well, our profit on that shoe is $150. So what is that called, that profit? Do we just call it profit? Does it have a name? We'll give it a name later in the course called gross profit. But for now, what we want to do is say there's actually three figures to know with every sale. There's what's called the cost of sale. That would be the cost price. So that is the value of the inventory that has been sold. It is the expense incurred in making each sale. We also call it the cost price. It's basically the amount the inventory was bought from the supplier for. Then this profit bit, we're going to call that markup. So that's the amount added to the cost price of inventory to determine its selling price. And later in the course, we'll call that gross profit. But for now, we're just going to call it markup. And lastly, there's something called selling price. That's the amount charged to the final customer. It represents the revenue earned by the business on the sale. And it is equal to the total of the cost price plus the markup. So that's what we've got. So remember, for every sale, we're looking for three things: the cost of sale, the markup, and the selling price.